Hi again, I'm Kate Stalter with Prosperity Source. I'm going to take another look at what's happening in today's stock market. Just taking a look at my chart over here. What I want to do is talk to you a little bit about diversification today, getting broad market exposure throughout all your investments so you capture leadership in your holdings. And you always see those little platitudes about diversification, and there's that corny little joke about, oh, it's really diversification. Okay, diversification is important. It does smooth out your returns. It's not as interesting as doing a lot of trading all the time, but the reasons for diversification are not always made clear. So I'm going to show you a little bit about that today. So here we have an S&P 500 chart. Yesterday I mentioned that the volume data may populate a little bit more after the close. We may see above average volume. We did in fact see that for yesterday. So here's what happened today. We're looking at a daily chart right now. I'm going to flip this over to a 10-minute chart. And you see we gapped up at the open because there was a great deal of optimism that the stimulus package would be passed in Congress. You see it fluctuated a little bit throughout the day. And then right here in the last few minutes of trading, what happened? Big downside action. Volume picked up as well to the downside. Why is that? Because it looked like the stimulus vote would not be held in Congress today. Okay. I want to talk a little bit more about volume. Go back to a daily chart here and show you. So we did see this big above average volume uptick today, but yesterday rather. But one thing that sort of concerns me about that, today's volume, we're about an hour past the close right now, still below average. One thing that concerns me about yesterday's volume, though, even though it was above average as it turned out, you see it's still lower than a lot of these other days prior to that. And you did have even many of these red downside days showing heavier volume before that. That's a concern to me. And I want to go back and show you here on the chart. I want to show you 2009. So I referred to this yesterday, the bottom of the S&P 500, March 6, 2009. So then what you had in the trading session on March 10th, 2009 is when this 11-year bull rally began. Now, none of us knew back then that that was the start of an 11-year bull market, okay? But what had happened, I wanted to look at this. Volume was 46% above average that day. So that showed a lot of conviction coming in off the bottom of this protracted decline. You also see that it was pretty good. You didn't have so many heavy volume downside days prior to that. But if we go back on a weekly chart, still looking at these years in the early 2000s here, I mean, you see, the market topped right in here in late 2007. I kind of remember some of the carnage that was happening right about then. And you see, it just became very protracted. I'm reminding some of you of what that looked like back then, if you all remember it. So let me go back to today. And I know that the hope is that this is going to be V-shaped, right? That's something we all hear about. It's going to be V-shaped. It's going to be very painful for a short period of time, and not just in the market, but in the economy, for people that are losing their jobs, for people that are ill. I mean, just a lot of pain right now. I know this. Everybody's hoping it's going to be very quick, and I know there's hope right there that, hey, maybe we've reached a bottom. You know, I said that in yesterday's video, I think it's very premature to declare that. I don't know. Maybe it is. I think it's premature to declare it. My friend Maria Reinhardt Henderson commented on my Facebook page. Maria has been a student of the market for many years. She and I first connected on Facebook several years ago when I was doing the Investors Business Daily videos, long time ago. And Maria made a great point. She said, the bottom comes only when most of us believe the bottom will never come. And that has certainly happened in other market corrections over the years. I mean, I talked about 2016 yesterday, even what we had back here in 2018, the end of 2018, which wiped out all the gains for the year. So we'll just have to see if that is the case. Maria makes a very, very good point, though, as we may not have capitulated yet to that. Okay, so I want to turn to industry performance as part of my look here at diversification, because broadly speaking, the market is divided into sectors. And let me show you here the S&P sectors. Okay, so here is a page from the Fidelity website. Very helpful. It shows you the big sectors in the Standard & Poor's 500. Morningstar uses some similar sectors. You have communication services, and then within that, they break it down into sub-industries: telecommunication, entertainment, interactive media, media, wireless, telecom. You have consumer discretionary. I'll get to that in a minute. Okay, consumer staples. And what that is, even though it's down today, that's the kind of thing you see people buying regardless of what's happening in the market and the economy. Like what? Toilet paper? Right? Okay. And that's the thing, even in a good market, when I'm using this example to people, I will tell them what are the things that people are not going to stop buying? Toilet paper, right? We're seeing paper towels right now. And of course, I don't think there's any rush on this, but like toothpaste, shampoo, the kind of stuff that we're all going to keep buying regardless of what's happening in the market or in the economy. Then you've got energy, financials, healthcare, industrials, infotech, materials, real estate, utilities. So these are the big sectors. So I want to go back to my chart here. Okay, this is MarketSmith from Investors Business Daily. And I haven't worked there in, 10 years or something. But this is a very good chart program. Auto manufacturers is the top performing industry group right now, okay? And you might be able to guess what the top performing stock is among auto manufacturers right now. And there we have it, Tesla. And you see right here, we've got on a weekly chart. A lot of individual stocks are bouncing up this week just because the rising tide is lifting all boats, or lifting all car manufacturers. That's a weird image. But you do see here that Tesla this week is up 26%. Volume's a little lower than average on the upside action. It's 4% lower than the prior week, and it's below that 50-day line. But you're going to see it below the 50-day line because it's only Wednesday. So let's go back to a... And there you can see that the volume is kind of tepid on this upside rise here on a daily chart for Tesla. Again, kind of remains to be seen how important that really is on a rally on a single stock. Just wanted to show you. I really find the volume is more telling on the broader indexes when we're looking at something like what we're looking at now in terms of a market that is trying to rally. More telling to look at the daily volume on that, and we are, as I said before, seeing a little tepid lately. So there's always market leadership. Something is always outperforming everything else. Back in 2008, Japanese stocks actually were the least bad developed market stock asset class. Okay, they had fewer losses than anybody else. And you can actually, if you wanted to purchase Japanese stocks, you could. There's the Ishares Msci Japan ETF. You see right now it's suffering along with everything else right here. You do see kind of a similar thing we're seeing a little bit to US stocks. Maybe a little attempt at a rally somewhat earlier than we saw in the S&P 500 right here. But still really nothing to write home about. Nothing too exciting in terms of the volume on the upside action, which tells you that there could be somewhat of a lack of conviction in, is this really a real rally attempt here? But one of the things I just want to show you this, I'm not suggesting you all run out and buy shares in this particular ETF because it was the least bad performer in 2008. What I am saying is you have to own all these regional stocks. Let me show you something else here from Morningstar. Okay, this is some data from 2019. The best performing country stock markets last year. So you see you have Russia, Greece, Ireland, the Netherlands, Switzerland, Taiwan, Canada, New Zealand, Egypt, Denmark. No, the US was not among the 10 best performing markets. Still did well, but was not one of the 10 best. And that's why people that only look at US stocks are going to miss out on some of these better performers. That is what can smooth your return in both a down market and an up market as well. You want to make sure you capture all the winners during an up market and have something that kind of mitigates some of the poor performance during a down market. And I know for people that are just running in there, they say, I want to buy all the winning stocks. I love that. I want to own the winning stocks. Well, you know what? A lot of these winners, if you're trying to get the absolute best performer at any given year, it's very likely to be something that is not even on your radar. And that's just really the basics when it comes to diversification. Let me go back to the S&P 500 chart here. But you do see, if you want to diversify, you do have a wealth of ways you can do that through country funds, through market capitalization funds, through funds that own just a basket of stocks. There are ways to do this. It's very scientific. You don't have to guess. And we have it, we're really fortunate today because in our parents' generation, grandparents' generation, they were not able to easily own small stocks, which typically do better than larger stocks, by the way. They were not able to own Russian, Greek, Taiwanese, Irish, Swiss stocks, Japanese stocks the way we can today. They were not able to do that. We're just so fortunate that it's easy for us to capture all the top performers from around the world and from every size company. Now, in a market correction like we're in right now, if you did not take some steps earlier to bail out, be very, very careful about going in right now and locking in losses. I know it can feel very safe to get into cash. I do understand that. But you also want to be careful that you lock in these losses that are harder to get out from. If you have a well-diversified retirement account already, check with your financial planner. Be sure that everything looks okay at this point. You know, like I said yesterday, if you're looking at some single stocks, and I'm not going to recommend any, I'm just not going to do that, but if you are looking at maybe nibbling at a few here and there, that term I used yesterday, maybe the time to do it if you're prepared that the market could still sink lower. I'm not talking about going in and messing with your retirement account. I'm talking about your play money account right now, okay? The other thing I want to say is that if you have a taxable account and you have a lot of capital gains over the years, let me actually go back to a monthly chart. Okay, so this one, you can see the S&P 500 starting back in 1995 over here. So if you have a stock or a fund or something in a taxable account that you bought a while ago, and maybe you have a lot of gains, you'd like to maybe pare back some of those gains, offset some of that with a loss. So in other words, if you want to take some losses now to offset other capital gains, maybe you can do that. You might be able to do that right now because I've seen a lot of people, back when I was in the asset management business, people would come in with these accounts that maybe they inherited from their parents or they had just held on to themselves for a long time. And you're seeing some crazy stuff, like stocks with gains in the triple, quadruple digits. And if they were to sell those now, they would have a huge capital gains tax bill. So now is the time to take a look. Is there any tax loss harvesting you might be able to do this year? This could be a good time to take a look at that and just see if that is indeed the case. Okay, so I'm just trying to share some very basic market concepts in these initial videos to help you understand diversification and maybe just some very basic portfolio management techniques, okay? And I will be back tomorrow with some more looks at the market. I definitely will get into more specific diversification strategies as we go along. Thanks everybody for watching. I appreciate you.